Hi everyone, welcome to Tuesday. I hope you were all able to have a fantastic long weekend, King's birthday weekend. Hey, before we go take a look at the performance for the New Zealand Stock Exchange, it is June. So if you're in KiwiSaver, now is a really good time to take a look and make sure that you've contributed 1,043 into your investment for the year. Reason being because you've got until the 30th of June to do so in order to get the government's contribution of $260. Doesn't apply, obviously, if you are a 39% tax bracket payer, but if you're anything less than that, then you can make voluntary contributions, whether you own your own business, whether you are perhaps taking time out of the workforce, you can still make that voluntary contribution and get the government's contribution as well, which to me makes perfect sense. After all, it's a 25% return on your money without doing anything. Now, if you're unsure about your KiwiSaver and you want to review it, just make sure you're in the right fund, that sort of thing. Or even if you want to get set up for KiwiSaver, I've actually teamed up with a New Zealand-based company called Koru Wealth. I will put the link in the show notes where you can follow through and do a risk profile, and one of the wonderful team there will actually give you a call and just talk through your goals and objectives and give you financial advice, which of course I can't do. So just follow that link. It is worth doing, just making sure that you are in the right fund and you are maximising your opportunities. On that note, just remember though, we're going to take a look at the performance for the New Zealand Stock Exchange for the week. This is for educational purposes only, definitely not intended to be personalised financial advice. For that, you do need to have a talk to your own financial advisor. Let's go. I've got the chart up for the New Zealand Stock Exchange for last week, being the NZX 50, and this is a really good sign. Look at this. We've had a good positive week last week. And if I look down the bottom at the volume charts as well, you can see that the volume has peaked above that 13 period moving average. That is a really good positive sign. Let's hope it continues, because we do need to see it rally a bit more and obviously get above the high that we saw around here, being the beginning of January this year, where it closed at 13,718. So we want to get back up around there, and then hopefully that could be a good sign that our market will continue to rally. Let's go over to the 1 year chart. This brings these candles up to dailies, and it gives us a little bit more idea as to what's been happening. Monday, you can see here where I've got my cursor, that was a down day, and there was a lot of buyers were trying to take control, but there was obviously a lot of selling going on, because if I hold my cursor there, it actually had a high of 13,101, but closing at 12,917. Tuesday, Wednesday were really good, strong days, which is great, and quite often you will then see a negative day again. And then Friday ended up being a good, strong, positive day. And if I look down the bottom, look at that volume candle there for Friday. That is really encouraging. And it's also encouraging to see, with the exception of Thursday, it did pop up above that 13-day moving average over the volume. But prior to that, the other decline back on Monday was well below that. So that is a good sign. What we want to see is when the market is increasing, we want to see that volume increasing as well. That indicates that there are a lot more buying interest than selling interest out there. So that is something that we definitely want to see, and hopefully it will continue going forward. Nobody really knows. Let's jump back over to that 5 year chart. Now let's put our moving averages on and just see what they are telling us. So like normal, I use the 30 exponential. Just leaving it there, you can see that the market last week has closed just above it. I definitely want to see our market completely above it, not just closing above it. I want to actually see these candles like back here through this period, which was June last year, all the way up to sort of the middle of January before we started seeing it fall again. You can see that these candles are trading above that 30-week moving average, and that's what we want to see as well. But it is encouraging that it has closed for the week above that 13-week moving average. Let's go and also put on our 15-week. This responds a little bit quicker compared to the 30, but it's really good to get that comparison because it just gives me an idea as to what really is happening. So if I zoom in, you can see that blue line being the 15-week moving average started to have an upswing. What we also want to see is it cross above through the red line. When that faster moving average crosses up through the slower period one, that is definitely a good healthy sign, and it means that you're starting to see a bit more of an uptrend in a market. And you can see again, if I use that example back through the period here of June through to January this year, you can see the market was trading above both of those moving averages, and the 15-week moving average was above that 30-week, and that's how we had that really good strong rally. So that is something that we want to see happen, and who knows, it may happen this week if we get a good strong week. I don't like trying to guess, but it certainly is looking a lot more positive. Let's just jump back to the 1-year chart. Again, it brings those candles up to dailies, and you can see that the moving average did cross through probably really around Thursday, Friday last week. So that is really good. When I'm looking at the charts, I like to look at things on a weekly basis, but then go to the daily for confirmation, simply because the daily chart will respond a little bit quicker than the weekly chart. And that's how I can see or form an opinion as to whether it is worthwhile getting into the market at the moment. I'll stop sharing. Good to see that we've had a lovely strong week last week. Now, personally, there was only one share that I was able to adjust my trailing stop loss on. Not much else happening in the New Zealand market there, but that's okay. We do want to see a lot more broad participation. There has certainly been companies going ex-dividend and the likes of recently, and that too does have a bearing on overall stock performance. Now, speaking of stock performance, this week for share and review, I'm going to take a look at property for industry. Good property sector share, and we will see how that's been going. Just remember though, if you do want to have me have a look at a share that you are looking at, doesn't have to be on the New Zealand market, just let me know in the comments or reach out and I'm happy to do that for you. So until Thursday, take care.